Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson. We finished up for the day, but at the end of the day, if you'll notice here, we did have what appeared to be kind of a little double top put in up in this area. We did not get entries back above 10,500. We really didn't get any entries back below this 10,250, 10,300-ish area. So once again, markets are consolidating here, but keep this in mind for tomorrow. We started down in the afternoon, slowly at first, and then starting to accelerate into the close. And as it would turn out, guess what? After the bell rung, that selling continued. So we are going to, more than likely, would be very surprised if we didn't start the day down tomorrow. It was quite a hard little sell-off there once the bell closed, and we might see a little bit more continued action as that proceeds through the night. So watch that closely coming into tomorrow morning. Overall, what do we see? Well, we don't want to go backwards. Let's go forwards. How about that? That'd be great. Holding here at these overhead resistance levels, not only at the 200-day, but also just almost making the 20-day today. High of 10,472. So we were a little ways off from that, but getting close to that 10,500 area. Holding very nicely with the 200 period here now. If the sell-off continues tomorrow, be interesting to see if this 10,100 area will stop it. Still calling for maybe a little short below 10,200 and then once again below 10,100 for those of you looking to take a trade tomorrow. Now, maybe to the short side. I am still going to wait until we get above this 10,500 mark before I look to go long on the Dow. More aggressive below the 10,200, more conservative below 10,100. We get below 10,100 and continue our move to the downside. I would recommend that you might want to hold on to that position for another day and into Friday and just see where that ends up putting you. NASDAQ on a 60 coming up to this 1860-ish area again and holding very nicely there as well. Once again, watch the markets and the futures overnight and let's see if the markets can make some sort of a move to pull themselves back up. But there was some pretty heavy selling going on after the markets closed. From a daily, we did touch and retest once again the 200-day moving average. Did not get above that 1860 mark, so we're still looking for moves back below these areas here to get short the NASDAQ. From a weekly, little early yet. We'll wait and see what we get tomorrow. Here's the SPX with a nice little double top. Look how well that 1100-ish area held. Just beautifully today. 1100.14 over here, 1099.77 today for those of you that are Elliotticians. Yes, that would qualify as a potential end of wave 2 up here if we continue our move downwards. We'll see how far that takes us. More aggressive below 1085, more conservative maybe below this 1080 or 1075 for your shorting opportunities tomorrow. Otherwise, above 1100, still the place to look to get long in the markets. The daily here holding well at 1100. Notice there are no moving averages flowing in through here, but it doesn't matter. That 1100 has been strong overhead resistance, as was that 1105 area. So today you can see we did close up just about 2 points, but there was some pretty heavy selling coming into the market once the market closed. Futures are at 1086 right now. That puts you at about a 1088-ish S&P. Even as it was, and that was just in the first 15 minutes after the markets closed. So you can see there was another 6-point drop getting at or below the 50-day moving average by the time the futures quit moving in the aftermarket hours. Here you can see the SPX weekly. We'll wait and see. We just might get a touch of this area down here before this is all said and done. The VIX on a daily was also up ever so slightly while the markets were also up, but that means we have a slight bit of a divergence now, doesn't it? So we'll see which one wins. Will it be the VIX, or will it be the market itself? I went ahead and drew some lines in here for you guys to look at. I'm not big on using TA for the VIX, but For those of you that have been asking me what would my lines look like on the VIX, this is what they'd look like. And what does this look like? It looks like a falling wedge. I can tweak this line ever so slightly. If you want to run it up top here, that's great. That would still put us well within this little falling wedge. Breaks above this 28, 29-ish area, though, on the VIX could lend itself to some more selling for sure. Fear coming into the market usually means selling into the futures and the S&Ps. On a weekly, let's wait and see where this ends up by the time we're all done. I like the fact that we are kind of working on a falling wedge on the daily. Apple on a 60-minute was up $1.10, but not pretty at the end of the day. Hit kind of a double top area just like the markets did. Pulled back, holding nicely to this 50-day moving average. Let's see if we get one last little bounce here. That'll take us up and above these areas. That's ultimately what we want to see. See if Apple can push itself up here one more time. And why is that? Number one, consolidation on the daily. This remains bullish as long as Apple doesn't fall. If it remains upwards here towards this consolidation area, it's still bullish in my book. The other thing is B of the weekly. For those of you that are bullish on Apple, you want to see it get itself back above this 20-week moving average if at all possible by the end of this week. That is at 254.81. That is where we hit yesterday, and that is where we touched again today. Funny how that works. So we are now struggling with this overhead resistance area here, looking to get above that by the end of the week. FAS on a 60-minute saw a little bit of a move up into that $21-ish area before falling back. And on a daily, you can see what we saw. It was just nothing. These are not moving very well right now. Hard to play FAS and FAZ down in these areas. This kind of working itself also into a bullish formation. Yes, it is pulling back, but that is all it is right now, is a bull pullback. So I still like FAZ. If it can get itself up and above about 1525, I'd have to say that would be a go for the longs at that point. A little stop back below 15 and let that thing run. See if it can't make that 16 or 16 plus area by the time it's done with the move. Watch that closely tomorrow, especially if the market tends to bleed itself out overnight here. From a daily, this is the same thing. It's bullish. Small little candles, but we are holding above the 50-day moving average. Every time it wants to dip below, it manages to keep its head above water. So as long as it'll keep doing that, I got to give the advantage to the bulls in this respect. See if it'll keep above that. Above 1525-ish, up into maybe the $16-ish area. Then above that, watch that 200-day moving average. And there you have it. Today's video. Pretty quick now, wasn't it? Yes, it was. All right, so what do we see in here? We can play around with this Elliott count all we want. Maybe a 1, 2. I'm sure some people are going to have this counted as a 5 down here. I think for a secondary, maybe even my primary, I might be looking at this as the bottom of a 3 wave, and maybe this is 4, and now maybe we've got a 5 left to come down here. Very, very hard to tell at this point, but all I'm going to do is watch these levels, guys. Just watch the levels. Below 10,350 and below 10,250 are still pretty aggressive, yet good entries to get yourself short. As long as you're going to day trade it, just watch it very closely. I think you can pull 50 to 100 points out of these moves on the way down. Once we hit the runner, we're going to be in for it, guys, and that's what we're looking for. Let's see if that doesn't come sometime very soon in the markets. I'll be back with you again, as always, tomorrow night. Bye.